And the government is likely to introduce the new income tax bill in Parliament on August 11th. Sources say the Select Parliamentary Committee, which was tasked with reviewing the bill, suggested 285 amendments, most of which have now been accepted. Key changes include revised capital gains rules for LLPs, amendments to corporate dividend deductions, and NIL TDS on specified transactions to ease compliance. The draft bill, spanning over 600 pages, was first introduced during the budget session on February 13th. The bill aims to replace the 6-decade-old Income Tax Act with focus of making tax laws simpler and more modern without tinkering with any tax rates. Let's go across to my colleague Shrimi now, joining us on the phone line to explain the story further.
Yeah, so sources confirmed NDTV Profit that government is expected to bring the much-awaited new income tax bill to Parliament in the ongoing monsoon session on August 11th. In fact, the legislation is, in work for some time after the draft bill was presented during the budget session on February 13th. And there was a select panel who was appointed to review the entire draft bill, and they made a report around it suggesting, around 200 plus of suggestion. Now, the important part here is that the bill is going to be introduced with key amendments in line with the suggestion of the parliamentary panel, which has submitted the report already in the beginning of the monsoon session. And those amendments is with respect to, capital gains rule for limited liability partnerships. Now, remember, this has created a lot of stir in the market as, it was reported that the government may increase the tax rate on some of rate to 18.5% to partnership firms. But that was actually a drafting error, which government is now rectifying, and that will be reflected in the final bill when they present it on 11th August. And other than that, there are tweaks expected in how corporate dividend deductions are handled. In the draft bill, they propose that there won't be any deduction for corporates who are, claiming dividends from other companies. So that will be also rectified. And in fact, there's a lot of confusion around zero TDS as well on certain specified transactions. That is also going to be reflected, and it's a kind of big relief for both corporates and partnership firms is expected in the final bill. So if all goes as planned, the new tax law will come into effect from next fiscal year, that is April 1st, 2026. And we should, as we've been reporting, and we know also that this is a part of larger push by the government to, simplify the entire tax laws and replace the 6-decade-old Income Tax Act 1961.
Right, Shrimi. Thank you so much for giving us that update. And yes, we will definitely see how the new tax law comes into effect.